So this is RP here, recording video on 19th April 2022. In yesterday's Nifty YouTube analysis, we discussed on Elliott Wave basis that Nifty is about to go towards 17,000. So you can watch that video by visiting our channel, or I'll add the link into the description. So we discussed that Nifty is about to fall towards 17,000, and we expected that it would go towards 17,240 to 250 levels, and then it would drop. Couple of signals that told us that one more drop is possible is MACD. There was no positive divergence. As you can see, price has made a fresh low from this point onwards, and MACD is also made a fresh low. So there is no positive divergence, and we were expecting based on MACD that it will create a positive divergence, and then the price will also go up from this point onwards. So that's what our view was. So 17,000 was it. You can see here there was a huge drop. What to say, this was a bloodshed in the Nifty in last 30 minutes, and it went very heavily on the downside, almost 400 or more than 400 points of drop. So you need to be well prepared in such cases, and you need to protect your positions with the stop loss. Always remember that. And our view was drop towards this or a consolidation. So in the beginning, first 15 minutes, if you see this candle, so if you see this first 15 minutes candle, it was very red, right? It opened near 17,276 and then gave a big drop on first 15-minute candle, filling the gap. That was signaling either it will drop or it will consolidate. So even MACD here, you can see currently it has dropped heavily, and we are expecting it to create a divergence tomorrow, positive divergence, and it could give the bounce by tomorrow's second half. Okay, so the view was pretty much in line, but the drop was not that big expected because of our wave count. We explained that Nifty is going downwards in the form of WXY double zigzag correction, where internally it has ABC moves. Okay, so this is how we explained yesterday. Now I'm changing a count a little bit. So the count is looking like this. Here I'm considering W, X, Y, XX, and Z. Okay, so this is a triple zigzag correction. Triple zigzag correction internally has A, B, C moves. Each ABC is 5, 3, 5 structure. So this is what it is looking like. Earlier it was in the channel. It has broken the channel and it is going down now. So this is how the chart looks with ABC moves. Okay, so this is how the wave count looks. So some of you would say this guy is changing wave count every now and then. That doesn't matter. Wave count is just to give us the proper direction and just to know how many swings are there and how much it can fall more. So wave count can be adjusted as per the changing market conditions. So that's what you need to remember. Unless and until you are going right, the wave count can be adjusted and your analysis can change as per the market directions. So let's check what is happening in this part and try to understand what will happen tomorrow, what will be the bullish and bearish cases. So by the way, Nifty made a low of 16,824 in last 30 to 40 minutes, right? So so this is the Fibonacci that I've plotted from 15,671 to 18,114, and here you can see 0.6 Fibonacci is coming at 16,604. So this is a golden number, or this is, you could say, a very important number in the Fibonacci series. Not in the Fibonacci series, but this has been derived from the Fibonacci. So mostly prices bounce from these levels. So you can also say that this is getting attracted towards 0.6 Fibonacci, and from there it could bounce. Okay, so there is still some scope left as per this particular Fibonacci is seen, right? Almost 200 more points fall it can be possible as well as per the Fibonacci, 0.6 Fibonacci. So moving on to the next, let's check this part, what is happening here. So as we mentioned, this is A wave, this is B wave, and the C wave is here. So here C wave's internal 5 moves are not visible. Not even wave A is visible, because wave A is usually a sharp or short wave. Okay, sharp in the sense you will not be able to see 5 moves of A wave, but mostly it is visible in the 5 wave of C wave. Okay, so A, B, C, like this it goes, right? So mostly C wave has 5 wave moves visible, but if the move is sharp, then it won't be visible as well. So considering that case, that we are going to consider both the cases. Now we are considering when you plot Fibonacci on B and this low, get 0.6 Fibonacci at 16,995. Okay, so tomorrow, first case, if Nifty starts trading above 17,000 for 15 to 30 minutes, if it like creates a big candle or opens gap up above this and sustains the gap for first 30 minutes, what we can assume is the fall could be over here. Okay, so that could be the one case, and we could be going on the upside like this, ABC. Okay, we will be going in a big consolidation if the fall is about to be ending here. Okay, so that is the another case. Then you should not think of further bearish moves in the market. That will be quite risky. So this is one case. Second case, it can still drop. Let's say it opens flat or gap up, goes towards 17,000. Let's say like this it goes, or it can even open the gap up. And sorry for the noise. So yeah, what we were saying that it can go like this, and then it can drop like this. Okay, go up, drop like that. Okay, so what it can do is it can form a ending diagonal pattern like this. Okay, that is possible. So in this case we will go towards 18,600. so for that, what we need to do is we need to wait for 16,824 break. Any bounce it is giving, and then it is breaking this level, that means that another 100 to 100 points we can grab. So that's what we can remember, but it will be a slow move and a zigzag move if it is going to make an ending diagonal pattern. And ending diagonal pattern in this case would be a bit you could say low probability case. Okay, so yeah, that is even possible, but we need to wait for break of this. If it opens gap down, then that confirms that there is still bearish trend left, and we are definitely going towards 18,600. Okay, so bullish case is if it starts gap up above 17,100, that is 0.6 Fibonacci of this particular move. If it opens gap up here, sustains first 15 to 30 minutes, then we are breaking on the upside, then that will be a reversal signal. So that is a bullish case. Another thing to note here on daily chart, we see that Nifty is at 200 EMA support, which is at 16,840. Okay, and here there is a good support between 18,000. So the rectangle that you see here denotes a support area. So here there are good supports, and the supports is in the range of 16,850 to 750 levels. So you need to remember this as well. So tomorrow it could happen that it would open a small gap down and then take a support near this and then bounce back. So you need to be very careful around 16,750 levels if it opens gap down. Okay, moving on to the next, let's check the option chain data. Option chain data shows us that 17,000 has been claimed by sellers. There was huge call writing on 17,000. Many 37% of put writers exited from 17,000. So that is a bad signal, hence the drop in the last 30 minutes. So but for this expiry, now the major support has shifted towards 16,500. Earlier this was the major support, and 17,500 was still having less number of put writers, but last 2 days of fall had made supports to shift lower. So support shifting lower is considered a bearish signal for the market as per the option chain data. So currently this looks to be a major support, and the second major support is 16,700. But this could be a little bit of tricky data. What I can assume is if it starts trading above 17,000, here quickly there will be a lot of put writers joining in. Okay, who will support the market for the upside, and expiry could happen between 17,000 and 17,300. That's what I can sense here. So tomorrow's opening is very important, and first 30 minutes will be important to see how the price behaves. So hope you remember the three things that I said: bullish, bearish cases. So if it opens flat, goes up and drops from 17,000, breaks 17,000, breaks 16,824 low, then we are heading towards 16,750 to 16,600 levels, which is near 0.6 Fibonacci. If it opens gap up, big gap up, and sustains above 17,000 for 15 to 30 minutes, we can assume that fall is over at 16,824. And the very bullish case, if it opens gap up above 16,100, then it would be very bullish case. Then we have to definitely assume that the fall is over and we are starting the reversal. So that's all. Keep updating So keep adding your doubts in the comment, share and like. By the way, this is just an educational video, not an investment advice. Do consult your financial advisor before taking any trading decisions. That's all for today. Have a great day. Bye bye.